Hey guys, I think I found a way to do an end run around the Fed. You should really look into this thing and see what you think. The year was 2012, and I spent all my waking hours on a website called the Daily Poll. If you were plugged into the Ron Paul presidential campaign that year, you know exactly what I'm talking about. The Daily Poll was where the movement lived online. That's where we coordinated, tracked every development on the campaign trail. We discussed strategy, we discussed philosophy. It was really this buzzing beehive of activity where everybody kind of just shared everything that they saw on the ground in their area. You know, the older folks who got their news from the television, they didn't know any of that stuff was happening. They didn't see it at all. But I was 28 years old back then, and Dr. Paul had lit something up in my generation. I guess that's back when we were still young people at the time. But it truly was a renaissance of sorts, and it fundamentally altered the very character of those of us who were a part of it. Well, one of Dr. Paul's key issues was how the Federal Reserve was a European-style central bank that had hollowed out the country over time. His position that we didn't get the Fed until 1913, and the country got along great before then. So why don't we just abolish this thing? You know, we had endless discussion about this on the Daily Paul forums, but then one day somebody dropped a post in there, and I'll never forget it. Hey guys, I think I found a way to do an end run around the Fed. And then he dropped a link to a Bitcoin website after it. And I remember clicking that link, and I probably browsed the site for maybe 15 or 20 seconds. And I'm like, what's this? It's magic internet money? Yeah, man. Good luck with that. Then I closed the tab and I went back to work on what I saw as more important. Bitcoin was trading at around $7 per Bitcoin at the time. That's how much you could buy one Bitcoin for. It's $7. But I dismissed it. And I went back to what I was doing. So I expected this magic internet money project just to fade away, never be seen again. Boy, was I wrong. So imagine my shock when Bitcoin comes back across my desk 2 years later in 2014. But now it's trading at around $850 per Bitcoin. It had increased in value by a factor of 120x. Meaning, had I bought $1,000 worth of Bitcoin when the gentleman brought it to our attention, that stake would have been worth over $120,000 just 2 years later. So now it's got my attention, right? I was forced to realize, okay, clearly there's something here that I need to learn about. And that's what prompted me to get educated on Bitcoin in 2014. And I developed an understanding that would elude the establishment for another decade. Hello and welcome back to the Phoenician League podcast. I'm your host, Joe Withrow. Last week, we talked about gold and about how the value of America's gold reserves has been frozen on the U.S. Treasury's books at $42.22 an ounce since 1973. We also talked about the 6 structural forces that are fundamentally reshaping the gold market today. All right, well, today we need to talk about gold's digital twin, Bitcoin. And I think it's best to walk you through my experience and my understanding because that opens the door to my perspective on where everything stands today. After Bitcoin, has fallen from a high above $120,000 a Bitcoin to around $63,000 as I record this today. So I got my start in Bitcoin in 2014, and that means I've lived through pretty much every cycle. I've watched the mania and the crashes, and I've seen all the Bitcoin is dead headlines, and there's been hundreds of them over the years. Somebody used to have a website that tracked them all. Maybe I need to go back and see if I can dig up a link to that site. But I think the most transparent way to explain what Bitcoin actually is and why I think everyone should own some is to give you the story of what I learned. So let's go back to 2014. This is 2 years after I dismissed Bitcoin on the Daily Poll, and somebody had sent me a link to a documentary, okay? And they were like, hey, Joe, let me know what you think of this. So the documentary that they sent me in 2014 was called The Gospel of Bitcoin, and it featured a man named Roger Ver. He had been one of the earliest and the most vocal Bitcoin advocates in the world. And you can, by the way, still find that documentary on YouTube today. I go back occasionally and watch it again myself every now and then. So when I watched that documentary for the first time, that's when it clicked. I'm like, oh, that guy was into something big. But the documentary, it only gives you the big picture. It gives you the why, or at least a perspective on the why. What it doesn't do is give you a thorough technical understanding of Bitcoin. So I found a book called The Book of Satoshi, which was written by a guy named Phil Champagne. Now, I have no idea who this guy is, but his book was enlightening. So really, the book is just a collection of writings and forum posts from Bitcoin's pseudo-anonymous creator, Satoshi Nakamoto. Those writings drill into the inner workings of Bitcoin from a technical perspective. And that's coming directly from the person who designed the system. And make no mistake about it, Bitcoin is a system. So I read that book in one sitting, and I'm like, this thing is brilliant. That was my reaction. The Bitcoin system design is brilliant, but it's also relatively simple. In fact, that's part of the brilliance. Armed with that understanding, I set up a Coinbase account and I bought my first Bitcoins. Now, I don't really recommend Coinbase today just because I think there are better ways to go about it. But back then, Coinbase was the name that I knew. So I bought those Bitcoins at around $850 per Bitcoin. And then I watched the price fall pretty much every single day for the rest of the year. By the end of the year, Bitcoin was trading at just over $200 per Bitcoin. So the dollar value of my holdings fell by over 70%, just like that. And I did not care one bit because the documentary I watched, the technical book that I had read, and then all the ongoing research that I was doing from there, all of it led me to a strong conviction. Bitcoin is money. That's what it is. But it's also more than that. Bitcoin is money that comes with its own payment network attached. The payment network is built directly into the protocol. So it's a peer-to-peer network with no banks required, no intermediaries at all. So if you hold Bitcoin in self-custody, you can send any amount of Bitcoin to anyone in the world at any time and for any reason. And there's nothing that anyone can do to stop you. Think about what that actually means. In a world where financial systems have become political tools, where accounts get frozen, transactions get blocked, assets get seized, really kind of based on who you are and what you believe, Bitcoin is pure freedom. As our friend from the Daily Paul noted, it's an end run around the Fed and really around the entire financial system. But it's also integrated into the financial system as well. So you can choose to opt in or opt out. Meaning, you can hold Bitcoin in self-custody and you can transact with people and businesses 100% outside of the system if you want to. Or you can transfer your Bitcoin to a platform that interfaces with the financial system and you can utilize your Bitcoin as collateral to tap into the dollar value that it represents. So that's what I came to understand in 2014. And that understanding is what made everything that followed relatively easy to navigate. So when the price crashed 70% on me at first, I did not care. Did not care. I bought more Bitcoins because I was not buying Bitcoin hoping to make more dollars later, right? I was buying Bitcoin because I wanted to own the actual Bitcoins. And whenever Bitcoin's price falls, that doesn't change anything else. The payment network still works beautifully. And there's still always going to be a hard cap of 21 million Bitcoins. That's all the Bitcoin that will ever exist, right? That's the foundational shift in mindset that I think so many people haven't made yet. So many came to see Bitcoin as a trade. That's something that you try to buy low, hope the number goes up, and then you sell for more dollars. But if you're approaching it that way, then every drawdown is terrifying. But if you come to Bitcoin as money, if you understand its properties and decide you want to own it as a monetary asset, then the volatility, it's just noise. The signal stays constant. So fast forward to 2017. This was the year the financial world first discovered Bitcoin. It really in a serious way. And so I was working inside the investment research industry at the time. And I had a front row seat to the mania. The price ran from under $1,000 at the start of 2017 to nearly $20,000 by December of that year. It was extraordinary. And at first I thought that I was witnessing the moment of mass adoption. The world was catching on, or so it seemed. I had people who I had not talked to in years calling me up to ask me about Bitcoin. And I was absolutely thrilled about that. So people would call me up and we're on the phone and I start to walk them through the fundamentals, what Bitcoin is, why it's important, how it works. And they would listen for maybe 30 seconds or so. And then they would very politely cut me off. Yeah, Joe, Joe, that's great. But How high is it going to go? Should I buy some now or is it too late? That's when I realized, oh, this isn't mass adoption. This is a mania. I saw it all around me. The only thing people wanted to talk about was Bitcoin. But it was because the financial news was running stories about some kid who had bought, $100 worth of Bitcoin, and now he's a millionaire. That's what caught people's attention. Most of them missed the real substance of it. So when the bull market ended and Bitcoin crashed, those people who got in thinking they would get rich, they all sold out at the bottom and swore up and down that Bitcoin was a scam. So in 2018, when Bitcoin fell back to around $3,000, I bought as much as I could. I did not think that I would ever get such a great opportunity ever again. So I saw that big pullback as a very big gift. I was invited to an entrepreneur summit in January 2019 to give a talk to the group on Bitcoin. And of course, I gave them my spiel of what actually mattered, which really was everything except the price. And I also told the group that this was the best opportunity to buy Bitcoin that they would ever have. And I offered to set them each up with a wallet and send them a small amount of Bitcoin to get started. A few guys seemed somewhat interested, but I don't think anybody actually took me up on my suggestion. At least nobody ever reached out to me afterwards with any questions. All right, but then came 2020 and Bitcoin started to move higher, and then it kept moving higher. By late 2021, Bitcoin's price approached $70,000 per Bitcoin. Somewhere around the $50,000 mark is when I started to get phone calls again, right? From mostly the same people as before. Hey, Joe, what do you think of Bitcoin now? Is it too late to buy? And my answer was the same answer I'd given in 2017. It's the same answer that I always give. Personally, I buy a little bit of Bitcoin every week. If you do that, you cut through the price volatility. You don't have to time it. You just build up your holdings over time. Through the ups and the downs. You just let the long-term trajectory do the work. But I don't think it registered. And then the bull market ended and Bitcoin fell from that peak of nearly $70,000 to a low around $15,000, I believe it was, late in 2022. All right. So then the next bull market kicked in, and in December 2024, Bitcoin crossed the $100,000 mark for the first time. That's when the phone calls started coming in again, right? Joe, is it too late to buy? And I tell them the same thing I always say, man, I just buy a little bit more every week. That's what I suggest doing. So Bitcoin hit an all-time high of over $126,000 per Bitcoin in October of last year. Today, it's trading at around $63,000 as I record this. So it's gone through another massive drawdown. But you know what I think about it? Or when I think back about it, what if someone were to tell you back in 2017 that one day in the future, Bitcoin was going to crash all the way down to $63,000. Like it's going to be this epic crash back down to $63,000. You'd be like, oh, wait a minute. Bitcoin's going to $63,000? That would have been unbelievable to most people less than 10 years ago. It would probably have been unbelievable to most people just 5 years ago. So what strikes me every time this cycle repeats is really the cost of not getting started. The people asking me, is it too late in 2017? If they had just taken my answer and started buying a little bit of Bitcoin every week, they would have built a sizable position. And I'm sure they would be amazed at what they would be sitting on today. But instead, they waited for certainty that never arrived, right? They missed the move. Then they came back the next cycle asking the same question. So it all comes down to understanding what Bitcoin actually is. That's the key. Because if you do, everything else is noise. All right, so let's talk about the properties of Bitcoin, just at a high level for those who might not be familiar with them. And first, there will only ever be 21 million Bitcoins. That's the hard cap. That number is written into the protocol, and it cannot be changed without consensus from nearly the entire network. And I'm telling you, that's never going to happen. Right? So in a world where banks and central banks can create currency in unlimited quantities, the 21 million hard cap is a paradigm break. This is the first genuinely scarce digital asset in human history. Now, think about this. Of those 21 million Bitcoins, 19.76 million of them have already been mined. They're already here. So that's 94% of the entire monetary supply. Yet the last Bitcoin will not be mined until the year 2140. And that's because Bitcoin was coded such that the rate at which new Bitcoins are mined, it decreases exponentially over time. So roughly every 4 years, the rate at which new Bitcoin is created gets cut in half, right? That's called a halving cycle. We're currently in the period after the fourth halving. So the new supply is now around 450 Bitcoins per day. And that's down from 900 Bitcoins per day before the most recent halving. So the new supply of Bitcoin decreases on a predictable, scheduled basis every 4 years, like clockwork. That's the one thing, or that's another thing that I thought was so brilliant about the system design. Another thing I thought was brilliant was the fact that the purpose of Bitcoin mining, it's not to get new Bitcoins into circulation. That's not it. The purpose of mining is to secure the network, right? So having the opportunity to mine new Bitcoins, that's just the incentive, right? Because the more computing power that the miners deploy in their arms race to mine the next Bitcoin block, the more secure the Bitcoin network is, right? And that's because the miners must confirm every single transaction that occurs. And to do that, they trace the history of every Bitcoin that moves really down to a fractional level, all the way back to its point of origin. And by that, I mean, when I send you any amount of Bitcoin, doesn't matter how much, the mining network is going to trace that amount of Bitcoin all the way back to when it was mined. So they look at, okay, here's a transaction that just happened. Where was that Bitcoin before, right? Where was it before I had it, right? And then they look at, okay, well, where was it before that? Where was it before that? And so it traces the entire transaction history all the way back until the day when that Bitcoin was mined. In this way, every single mining rig maintains a clear transaction record for all Bitcoin in existence. And then they broadcast their transaction network to transaction record to the network. So each miner broadcasts their transaction record, and the network has to make sure that everybody else has a matching record, right? That's why Bitcoin has never been hacked, even though it's been a target ever since the early days. Now, Bitcoin exchanges have been hacked, but exchanges are not part of the network. They're really more akin to traditional brokerages, right? Bitcoin was designed to run perfectly well without them. You know, I'm not even sure Satoshi envisioned exchanges forming in the way that they have. And so that brings up a key point. If you hold Bitcoin on an exchange, you know, Coinbase, Kraken, wherever, you don't actually hold the Bitcoin. You hold an IOU from that exchange. Now, Coinbase and Kraken are very reputable companies. Don't get me wrong. But the history of the cryptocurrency ecosystem it's littered with platforms that have held customer funds and then failed to return. Right? So I very strongly advocate holding Bitcoin in self-custody. There are specific wallets that are great for this. So when you do that, your Bitcoin is yours. In just the same way that gold in a home safe is yours. You know, it's a bearer asset, just like physical cash is a bearer asset, just like gold, right? Whoever physically holds the asset, that's who owns it. Now, in recent years, the narrative has arisen that Bitcoin is a store of value, right? Store of value. And I think that's absolutely true, okay? As long as you're not buying every mania and then selling every crash anyway. But Bitcoin is so much more than that. It's also a functioning payment network that runs 24 hours a day, 365 days a year, nights, weekends, holidays, you know, all of it with no central authority and no off switch. So as long as you are holding in self-custody, anybody in Bitcoin can send $10, they can send $10,000, or they could send $10 million to anyone else, anywhere in the world, at any time and for any reason. That's why I see Bitcoin as money. We can transact with Bitcoin more easily than any other medium of exchange, if we take an hour or two to learn how it works anyway. All right, so all these properties together are what make Bitcoin fundamentally different from everything else in the financial space. And it's not a company. There's no CEO. There's no headquarters to regulate. There's no server farm to shut down. Bitcoin's a protocol. And protocols, once they reach a critical level of adoption, they create massive network effects. And that's what's happened, right? So at this point, we need to bring this back to last week and to some structural changes at the institutional level. But before we do, I want to make really one final point, right? Bitcoin is not crypto, right? I despise the word crypto because the people who came into the cryptocurrency ecosystem they turned it into a casino that's filled with sharks and really petty criminals, right? So I do not care one bit about any of the other projects that you can find listed on coinmarketcap.com. I don't care one bit about staking or about DeFi or about any of that stuff. Don't care. To me, Bitcoin's the show, and most everything else in the space is a distraction. That's how I see it. And I say that because I know people who bought Bitcoin in 2017, and then they got caught up in the idea that the altcoins were the ones that were going to boom next. So they traded in their Bitcoin for these crappy other cryptocurrencies. Then those altcoins wiped out, and many of them are nearly worthless today. So in their greed, the folks who did that, they traded a stash that would be worth today hundreds of thousands, maybe even millions of dollars. And they gave it up for shady altcoins that are worth a very small fraction of that. It's kind of ironic, right? In their rush to chase dollars, they actually, they lost a small fortune. But those of us who never cared about coming out with more dollars, we own a world-class reserve asset that the world is finally waking up to. So last week, I walked through 6 structural forces driving the remonetization of gold, right? Central banks entering the market as net buyers, the sovereign revaluation math, that $42.22 number and what closing that gap would mean for the U.S. balance sheet. We also talked about the institutional allocation curve and how that hasn't really started yet. We still have 72% of family offices that have no gold exposure. They don't own any gold. So we noted that gold's adoption by the establishment was structural. Well, Bitcoin is at an earlier point on the same adoption curve, right? And several things are happening right now that mirror what we are seeing in gold. So in January 2026, President Trump signed an executive order establishing a strategic Bitcoin reserve for the United States. That order directs the government to hold Bitcoin as a reserve asset on its balance sheet. Then in May, the American Reserve Modernization Act was introduced in Congress. And this bill goes further. It authorizes the U.S. Treasury to acquire up to 200,000 Bitcoins every year for 5 consecutive years, or 200,000 Bitcoins per year for 5 consecutive years, right? And the bill lays out a target holdings of 1 million Bitcoins, right? And it mandates that the government has to hold these Bitcoins for at least 20 years and have independent audits throughout that time period, right? So Uncle Sam wants to acquire 1 million Bitcoins, right? And that's out of 21 million Bitcoins that will ever exist, right? They want to turn Bitcoin into a sovereign monetary reserve asset. Look, regardless of what we think of that from a political standpoint, this does send a signal that Bitcoin is being monetized at the institutional level in just the same way that gold is being remonetized, right? Now think about this. Only 164,000 Bitcoins will be mined this year, right? And that same for next year, same for 2028. After the next halving cycle in 2029, only 82,000 Bitcoins will be mined in a given year, right? That's it. Yet the U.S. government wants to buy 200,000 Bitcoins each year for 5 years. What do we think that's going to do to the price, right? And if Uncle Sam starts doing this, do we think other countries will just kind of sit on their hands? Or will they get in on the act too, right? In a multipolar world where monetary positioning is a competitive game, where countries are quietly diversifying reserves away from dollars, the logic for sovereign Bitcoin accumulation is the exact same logic as sovereign gold accumulation. The asset can't be frozen and it doesn't run through any counterparty system. So if you hold it, you own it and you can always transact with it, right? So we can apply that same logic to those institutions and the family offices that we looked at last week. I'm confident in saying that they will want to allocate at least 1 to 5% of their assets to Bitcoin too, for the exact same reasons, right? So we are at the very beginning of what will be an institutional adoption cycle here, right? It's the same adoption curve that gold is on, just a little bit earlier in the process, right? Think about it this way. Gold's market capitalization today is over $30 trillion. That's how much the entire stock of gold in the world is worth at the current market price. Well, Bitcoin's market cap is just 1.3 trillion. That's it. It's nearly 30 times smaller than gold from that perspective. So friends, it's still the early days here. Even with Bitcoin trading above $60,000 per Bitcoin, there's still plenty of room for adoption to grow and for the price to go higher. probably much higher. It's the same logic. Real assets are the foundation of wealth in a world where the age of paper wealth has ended. All right. So when I dismissed Bitcoin on the Daily Poll in 2012 as magic internet money, I was operating within the only framework I had. I saw gold as money, and I believed money had to be something tangible, right? I changed gears in 2014 because I took the time to learn what Bitcoin actually was. And once I understood, I was amazed. And I will suggest to you that Bitcoin is actually very tangible. It's not just magic internet money like I assumed initially. No, Bitcoin is backed by an incredible amount of computing power, which consumes an incredible amount of electricity, right? So just like it takes real work and real financial commitment to mine gold, it takes the same for Bitcoin. I see that as a feature. So I'm several cycles in at this point. I got into Bitcoin around $800. I watched it fall all the way to $200. Then it goes up to 20,000, back down to 3,000, up to 68,000, down to 15,000, up to 120,000, and now we're back down to 63,000 or so today. If all you look at is the price, that's a roller coaster, right? But guys, the Bitcoin network has run without interruption every single day during this entire time. Transaction after transaction, block after block, Bitcoin just keeps trucking. I'm telling you, the protocol works amazingly well. The establishment has been running through the same learning curve that I ran through in 2014. Right now, right? They're just moving slower because institutions always do. But the trajectory is unmistakable. The United States establishing a sovereign strategic reserve for Bitcoin. Corporations are adopting it as Treasury policy. The largest investment firms in the country, I'm confident in saying, they are going to suggest an allocation, probably 1% to 5%. So Bitcoin, it's not looking for permission or validation from any of those things, right? The network doesn't need JP Morgan's approval. It doesn't need Congress's endorsement. It doesn't need the Federal Reserve's blessing. None of that. It runs regardless. But when those institutions catch on, the structural shift accelerates, right? So the big takeaway today is this. Bitcoin is not about making money in the same way that investing in the stock market is, right? No, it's fundamentally something different. So my suggestion has always been, whenever you make a little bit of money, just move some of it into Bitcoin. Whatever amount is comfortable to you is fine. It doesn't matter. Just do it on a regular schedule. Don't stop. And I promise you'll be amazed at what you can build. And I have an offer for you today, since you've made it this far in the podcast. If the perspective that I'm sharing with you today is new to you, and if you don't have much experience with Bitcoin, I'd love to send you a small amount to get you started. There's 3 wallets that I have experience with. There's the Edge wallet, that's EDGE, the Aqua wallet, AQUA, and the Electrum wallet, ELECTRUM. Those are the wallets I have experience with that you can download on your smartphone. All right, so do a little research and see if you'd like to give one of those wallets a try. If you do, email me your Bitcoin wallet address, and I'll send you a small amount of Bitcoin to seed your new wallet. No questions asked. I do have a request, though. I would ask that you explore our resources at PhoenicianLeague.com first. And if you aren't already on our email distribution list, I would ask that you sign up for our emails at that page. And that's how you're going to get my email address anyway. After you've done that, send me the email with your wallet address, and I'll send you a little seed Bitcoin, all right? Just a small amount to get started. And please know, guys, I can't keep this offer open forever. We just started this podcast, so I think our listener base is small enough to where we can do something like this right now. But at some point, we're going to have to cut it off. So if you're interested, please don't wait. And again, thanks very much for taking the time to listen. Oh, and if we have anyone with experience that's watching the YouTube version of the podcast here, please leave a comment for us and share with us which wallets you prefer and really any other guidance that may be useful to people. I know I've hit everything kind of from a high level today, and there's a lot of stuff that, that we could drill into that we haven't. So please throw anything in the comments that you see is useful. And again, I appreciate your time. I love talking about Bitcoin like this, and we're just getting started here with the podcast. We have a lot more to cover in the episodes ahead. So I'll see you again next week. That's going to do it for today's episode of the Phoenician League. If you found any value in today's conversation, please subscribe to stay plugged into the network. We put out new episodes every week.
And if something we talked about today made you think differently about money or investing, please leave a review and let us know. That helps the show reach the people who could really benefit from it. And remember, financial freedom does not start with money. It starts with understanding and a fiercely independent mindset. So if you would like to dive deeper into the topics we cover, I invite you to get on the Phoenician League email distribution list at PhoenicianLeague.com. We often send out detailed written analysis on the various investment opportunities and the asset classes that we advocate, and we connect the dots across what's actually happening in the global economy. And then we host online strategy sessions periodically as well, where we can really drill into how to take full command of your financial future. So stay connected at PhoenicianLeague.com. And until next time, let's stay smart and let's stay independent. This is Joe Withrow, signing out.